Dear listeners, welcome to Civinity Investor Relationship Conference on the offering of a new bond issue. I'm Olga from Nasdaq Vilnius, and I will be moderating today's event. During this session, you will be provided with a detailed overview of the latest developments in the company and the bond issue that is being offered. The presentation will be followed by a live Q&A session. You're encouraged to submit your questions throughout the presentation by using the Q&A window at the bottom of your screen. Please note that this webinar is being recorded and replay will be available on the Nasdaq Baltic YouTube channel shortly after this call. That being said, I'm pleased to give the floor to our today's host, Tomas Staškūnas, the Chief Executive Officer of Civinity Group. Please, Tommy, proceed.
Morning, dear investors and the remaining financial community. I would like to present the Civinity Group of companies, latest developments of a group. Also, will tell you more about our bond offering. First of all, I would like to tell you that I have joined the Civinity Group about 2 years ago as CFO, and currently I'm acting CEO and very deeply involved in all the financial activity of the company. Presenting the group of Civinity, I would like to mention that we are mostly operating in facility management business area, which is renowned for strong recurring revenue share. We are having more than 80% of our revenue very easily forecastable. So either monthly fees or additional works which we can know in advance. We have more than 1,500 employees. We are overlooking more than 5 million square meters of residential facilities, having more than 1,600 customers in the commercial sector, and we are growing fast. We are growing both organically and through acquisitions, and in the last 10 years we have increased the size of the group from 15 million to 100 million euro in revenue. So this was mainly achieved through acquisitions in different fields of our operations. And we are not a new players in the bonds market. We have already issued more than 50 million bonds through the history of a company, both public and private. And our current public bonds are listed on regulated market in Nasdaq. The Civinity Group operates in 4 different segments, and the core of the business and the base on which the company has been established and growth was achieved is residential building facility management. It still makes almost half of our revenue, and we are a strong player in residential facility management both in Lithuania and Latvia. Also, we are providing commercial facility management services to both Lithuanian and Latvian customers, and this segment makes close to 18% of our total revenue. Besides facility management, we also have significant presence in engineering sector. We are providing HVAC and BMS system designing and implementation in Lithuania, Latvia, and we have also this segment in London, UK. And very recently, just this beginning of this month, we have announced about addition to the group. We have acquired elevator maintenance and installation company operating in Croatia and Slovenia. So not yet presented in the results, as all the results are for 2025, but we do have new addition to engineering sector. And the newest addition to our operations is more digital, digital solution. We have invested almost 2 years ago into Mobily, which is a strong player in Latvia. And we see it as a broader strategy of a company to search for additional services which we could provide to service life, to city life, to our clients who are living in big cities. So we don't want only to look after the buildings, but we also want to provide other services which are really useful living in big cities. So Mobily payment solution is a good example of that. We are providing payments for parking, public transportation, AV charging, intercity transportation, and planning to add more services in the future. We see this additional digital solutions as a broader strategy, as we call it internally, Smart Green City, with which we want to be more involved in city life. The group of Civinity have constantly grown through acquisitions, and we had a lot of them during more than 20 years of history of a company. So most of those acquisitions have been initially only in facility management industry, in residential facility management, but later on we added additional segments, commercial facility management, engineering, and latest additions are 2 years ago investment into Mobily as a payment solution. And this year we have already announced 2 acquisitions. One we are still awaiting for Competition Council confirmation, and another with Metus company, which is maintaining and installing elevators. We have announced just very recently at the beginning of May. And we are for this acquisition strategy, we are using different types of financing, and besides bank financing, private debt instruments, we also issue public debt. So this offering, which we are going to present in more details later on in the presentation, is part of this strategy. So just very shortly about the bond offering. Later on in the end of the presentation, I will show more details. But we are having confirmed a program of up to 50 million euro bonds last year, and we have already issued a little bit more than 10 million euros last summer, according to this bond program. The initial bond offering last year was used to refinance public bonds with approaching maturity, and now we are offering up to 15 million euro of additional bonds, and we are planning to use these bonds to finance our acquisition strategy. The bond duration is the same as last year's bond, so July 2029, a little bit more than 3 years long. And we are offering the bonds at 2 possible yields, 9.5% or 10%. So investors can choose at which yield we would be willing to invest. And the fixed coupon is same at 10%, will be paid semi-annually. The bond is unsecured, and the bond will be traded immediately after the offering, and it is suitable for Lithuanian investment account. Talking about the group, in 2025, the biggest part of our operations were in Lithuania. We had very healthy organic growth of our revenue in Lithuanian market, approaching 77 million euros and making 77% of total group revenue. In Latvia, we are having 22%, and in UK, just 1%. So we had some we have not been very happy with our Latvian operations of facility management and especially engineering part, and we have already made some reorganization to improve the results in the for the future. We are making changes in management teams to come back to the growth strategy in Latvia, while in UK we are only working with engineering projects. And in 2023, we have finished a big engineering project and was working on the new big contract, which we finally signed end of 2025. So we will see a significant increase in our revenue from UK in the upcoming years. Talking about consolidated group operations, we have reached a significant milestone of more than 100 million euro in revenue last year. So we had quite significant organic growth of more than 13%, and we have been able to maintain profitability margin. So our profitability on EBITDA level also improved at similar pace as revenue. We have added almost 1 million euro of EBITDA. So I just want to mention that last year we have not closed any deals, so this growth was fully organic. And we have improved our equity slightly. We had a negative effect on equity as we have bought out one minority shareholder from one of group companies. So this buyout had a negative effect on company equity. And we have slightly increased our net debt to pro forma EBITDA ratio because of additional financing which we added last year. And part of that financing was related to finishing the investment process into Mobily and also buying out this minority shareholder from company Valandinis. I want to highlight the fast growth of a company, of a group of companies. In the last 10 years, we have increased the size of a company from 15 to 100 million euro, and we have been able to increase EBITDA level accordingly. So currently we have more than 40 companies in the group after latest additions of Metus in Croatia, and we are constantly looking for new companies suitable for the growth and for the group. Now I would like to explain a little bit more different segments of a company. So first of all, the backbone of the group, the starting segment from which the group was initially born of. So it's residential facility management business. We are looking after close to 90,000 apartments and generating 46 million in revenue last year. We are providing all types of services to the multi-apartment buildings, and this segment is very stable and very easily predictable. and we had nice organic growth during the years, and we have very strong profitability in that segment. So this is very stable and good foundation, which provides us opportunity to grow the group in other segments. Another business segment is commercial business unit, facility management. We have about 18 million euros in revenue. So we also provide all types of facility management services to our clients. And we have about 1,600 clients in both Lithuania and Latvia together. So we are established player in the field, just managing to improve and increase our revenue, just not as happy with our profitability. And the main problem with our profitability last year was that we had quite a lot of agreements which we signed a long time ago, and we had to renegotiate the terms. And we have managed to do that in 2025 with new management team managing the company. So we have already improved the results of the segment in the second half of 2025, just not being able to see through, as first half of the year was really challenging. So we had focused on both improving top line, so increasing revenue, increasing the selling prices, but also we have improved significantly our efficiency with more efficient, smaller teams, providing good level services. We do expect that 2026 will have better results already. And our engineering business unit, which is the most cyclical one, we are providing mostly HVAC system implementation, so ventilation, cooling, conditioning, heating, and also BMS systems. And this segment for us is the most cyclical one. It depends very strongly on the cycle of construction industry, as we are mostly focused on commercial buildings, so not so much on residential buildings. We have felt quite a significant slowdown in this field of activity in the last couple of years. We have maintained the revenue, but are not happy with our margins, which are significantly lower comparing to much better years of 22, 23. We do expect that this sector should improve looking into the future, but at the moment in 2025, we still had low margin. And our last segment of operations, payment solutions. This is mobile business in Latvia. We are providing payment solutions for customers who are using public transportation, intercity transportation, parking, EV charging, other services. And our investment into mobile almost 2 years ago was really important for us to start looking into more digital solutions who would complement our offering to the city life. And mobile have already, besides Latvia, which is the main market for them, added possibility to pay for public transportation also in Estonia and in Lithuania. First, we started from Vilnius, and later on we will add more services to the offering. And one of the services we are planning to add is possibility to make utility bill payments, which quite strongly relates to our core business. And last year, we have already reported full year results. So comparing to 2024, which was only reported from August, we see significant improvement in both revenue and EBITDA. But as I said, we are comparing about half year to full year results. What is really impressive is ability of a mobile team to grow the customer base. Last year, company had more than 617,000 unique customers, and that is more than 80,000 more comparing to year 2024. So in context, we do understand that these numbers are super impressive, taking into account the size of Latvian population. Now, a little bit about the company financials. So as I mentioned, we have achieved the important milestone, more than 100 million euros of revenue, and all four business segments have added to achieve that. We have increased our gross profit margin from 20 to 21.5%. It was achieved mainly in residential and payment segments. Of course, in payment segment, we have different structure of P&L. We have much higher gross profit marginality because of type of business. And as I mentioned already, in commercial segment, we have seen some headwinds, and we have already made changes which we feel would result in better results in the future. So the much stronger team is already from the start of 2025. First half of the year was used to prepare for negotiations with our customers, to put a proper structure of the company. And in the second half of the year, we have already saw quite significant improvement in the results. So just not been able to achieve full scope result in just 1 year. And talking about our EBITDA, as I mentioned, we have increased our EBITDA level by almost 1 million euro. We have maintained EBITDA margin at 8.3%, and both payment and residential segments have added quite significantly to our EBITDA final results. And talking about our profitability, we have kept our operating expenses at check. We have increased significantly less comparing to our gross profit. Just we had significantly more investment into IT solutions, which increased our depreciation and amortization expenses, and net interest expenses have increased because we have added additional financial debt. Last year, we have refinanced a significant part of our current obligations. So we have improved our liquidity ratio quite significantly, and it is now 1.3. So we are very stable. We have very stable balance sheet. Equity level have slightly decreased, and this acquisition of minority interest was one of the factors impacting slightly lower equity ratio end of the year. We have refinanced most of our current debt. Now we have much longer duration debt profile. Only about 10% of financial debt is current, and we are calculating and reporting our financials according to IFRS. So we also include leasing obligations into our financial debt lines, and these leasing obligations include not only financial leasing but also operational leasing, office leasings. So about 2.5 million of financial leasing obligations are included in the total debt. Net debt to pro forma EBITDA slightly increased, but we still have enough space to add more acquisition targets and to acquire new successful companies to the group and improve our overall results. One very important thing is that our business is asset light and we don't need big working capital to operate. So our EBITDA conversion into cash from operating activities is close to 100%, which is illustrated in the last 2 years financials. So we don't need much additional cash for daily operations. Most of the cash we are getting from our operations and we are getting from outside markets are used to increase the size of the group, to acquire new businesses. And a little bit about our acquisition strategy. So we have already announced about 2 acquisitions this year. Atmeo, company operating in Vilnius as a residential facility management provider. It's a medium-sized company with revenue of about 3 million euros. And currently we are awaiting for Competition Council confirmation to close the deal. And another announcement was Metus, which is elevator production and installation and maintenance company operating mainly in Croatia, but also with already started operations in Slovenia and providing installation services in other markets like Germany. The revenue last year was about 19 million euro, and we do see this as a nice addition and good starting point to enter new markets for us, Croatia and Slovenia. We have some additional targets in Central Eastern Europe, in Slovenia, in Czech, Slovakia. We also have initiated some talks in Poland, in Hungary, in Baltics, and also some very early stage talks in Finland. So looking at our current acquisition pipeline, we have 7 targets with which we have already quite advanced in the process. And if we are able to acquire all 7 targets, which we are looking into this year, we would add more than 90 million euro in revenue, and we would add 8.6 million euro if in pro forma EBITDA. So that would be in that way we would increase the Civinity Group almost double in size in just 1 year. And we are investing most of our profits and from operations into this acquisition activity also. So no significant payouts to the shareholders, and shareholders are willing to keep most of earnings in the business and to and to increase the size of Civinity Group faster. So talking about the fields of activities which we are looking into. So when we are looking for new acquisition targets, we are of course looking into our core business, like facility management companies, which we can very easily integrate into our group. But also we look at more digital solution providers which work with companies similar as we are. So digital solutions for facility management companies, for real estate management companies. And we're also looking at parking operations, which would very nicely complement the current business activity of Mobily. So in case we see that the business we are looking into is in the same field of activity and same geography we are currently operating in, we are planning to integrate those companies quite strongly. But also we are looking at businesses with strong leadership, strong management, and in that case, especially if it's new geographies and little bit different field of activity, we usually try to buy less than 100% to have strong team remaining in the business and to grow the business together. Now a little bit more about the offering of the bonds. So the nominal amount of the bond is 1,000. The minimal investment amount is 1 bond. So it's a retail offering. We are offering in this tranche up to 15 million with possibility to increase the amount if the demand will be significantly higher. And we are offering at 9.5 or 10% profitability yield. So the investors can choose at which profitability we would like to invest. And if we will have enough demand at profitability of 9.5%, we will only include those investors. But if demand will not be sufficient, then we will also keep the option to provide also this 10% investors with possibility to invest. The interest payment is semi-annual, twice a year in July and January. It will be used for mergers and acquisitions. So we want to finance our strategy. It's unsecured senior notes. The covenants are net debt to pro forma EBITDA below 4 and equity ratio above 15%, with significantly stronger covenant required for dividend payout. So for dividend payout, the equity ratio must be above 20%. So the placement currently is offered in all 3 markets, Lithuania, Latvia, and Estonia. As the offering price includes already accumulated interest until 17th of June, which will be the issue date, and the subscription period is from 27th of May, from yesterday, till 10th of June. So 2 weeks subscription period, and we will make on the 11th of June, we will make allocations, and we have main arranger as and distributor as Luminor Bank, and we have additionally sales agents in the name of Evernorth in Lithuania and Redgate Capital, which operates in Estonia and Latvia. think also for subscription, the subscription is done through NASDAQ system. So all banks are participating and providing possibility for their clients to invest. So each client can choose their own bank and look for possibility to invest directly. And as I mentioned, the subscription started yesterday and will end on 10th of June. So thank you for your attention, and now I'm ready to answer your questions.
Thank you, Tomas, indeed for the very detailed presentation. And now we will move to the questions. But before that, I would like to remind everyone that you can submit your questions in writing by using the Q&A section that you will find at the bottom of your screen. So let's give a minute to those who might wish to submit a question. All right, it looks like we don't have any questions at the moment, but if anything comes to your mind later, please do not hesitate to reach out to the company directly by the contact that you see on your screen. Otherwise, I would like to thank you all for participating in this call. It was a pleasure being with you today.